April 2nd is a liberating day. Liberation Day. Liberation Day. This is the beginning. April 2nd is going to be Liberation Day for America. Now some of that money is going to be coming back to us in the form of tariffs.
On April 2, 2025, everything changed. President Trump dropped a policy bomb, sweeping new tariffs, including a 10% baseline on all imports and targeted rates as high as 145%. Within 48 hours, $6.6 trillion in global value vanished. Markets collapsed and panic took hold. But in the middle of the chaos, some people made a fortune. Warren Buffett walked away $12 billion richer. A 22-year-old Gen Z trader made $80,000 in 48 hours, and a rare metals company surged 70% while the rest of tech burned. This is the story of who thrived during the Trump 2025 market crash and who paid the ultimate price. The tariffs were bold. A 10% tax on everything crossing the border, up to 145% on key goods from China and Mexico. It was meant to bring manufacturing back to America. Instead, it brought markets to their knees. The S&P 500 fell 13% in 48 hours. The Nasdaq, heavily tech-weighted, dropped nearly 18% year-to-date. Then came something worse. Trump publicly hinted at removing Federal Reserve Chair Jerome Powell. That single comment sent a ripple through Wall Street. Investors began questioning whether the central bank could act independently in times of crisis. It was no longer just about trade, it was about stability. By mid-April, $6.6 trillion had been wiped out from global markets. But where most saw red, a few saw green. While others scrambled, Warren Buffett stood still. He didn't buy the dip. He didn't make any new moves at all.
I mean, tariffs are we've had a lot of experience with them. They're an act of war.
And that's exactly how he made $12 billion. Berkshire Hathaway's portfolio is a fortress of cash-generating giants, from Coca-Cola to Kraft Heinz to American Express. These weren't just dividend machines. In a crisis, they became safe havens. Even major holdings like Apple and Occidental Petroleum dipped, but investors still ran towards Berkshire as a whole. Why? $150 billion in cash, decades of consistency, and a leader known for weathering storms. Investor sentiment was simple. If you didn't know where to go, you went to Buffett. Berkshire stock rebounded hard, not because of what Buffett bought, but because of what he didn't sell. While Wall Street tightened its belt, Goldman Sachs went hunting. The firm's trader capitalized on every ripple of volatility. Equity trading revenue surged 27%. First quarter profits hit $4.7 billion, their highest Q1 results since 2020's pandemic crash. From option strategies and hedge fund unwinds to high-frequency arbitrage, Goldman's trading desk had one of its most profitable stretches in years. According to internal reports, some trading teams posted daily profits exceeding 8 figures, levels not seen since the GameStop short squeeze era. While others watched from the sidelines, Goldman moved like a machine, fast, efficient, and deadly precise. She wasn't a hedge fund manager. She didn't wear a suit. But Sierra Aliyah, a 22-year-old Gen Z retail trader, walked away with $80,000 in 48 hours. She shorted overvalued tech stocks using leveraged puts as panic spread and hit hard when others froze.
I literally just made what would have been my yearly salary in less than an hour today. Today, I made $41,000.
Her biggest win, $42,000 in 1 hour. Then another $39,000 by the end of the week. Her trade breakdowns went viral across TikTok, Discord, and Twitter. Thousands followed her real-time commentary, and her following exploded overnight. She became a symbol of a growing movement. Internet-native investors using social media, data, and mobile platforms to move faster than Wall Street. While institutions adjusted portfolios, Sierra adjusted screen time and won. Not all winners made headlines. Charles Schwab's brokerage saw a wave of account inflows as investors fled high-fee brokerages and risky apps. Schwab added billions in assets under management during the worst of the crash. Its stock jumped $2.5 billion in market value in a single trading day as trading activity surged across retail accounts. Then there was Roger Penske, the billionaire auto and logistics mogul. His empire, focused on domestic infrastructure and supply chains, stayed largely untouched by foreign tariff exposure. Penske's business value reportedly grew by over $900 million in 2 weeks, purely by being in the right place when the world broke apart. They didn't trade the market, they just let the market come to them. If anyone felt the sting of Trump's tariffs, it was big tech. Elon Musk lost $121 billion. Tesla's supply chain, heavily reliant on Chinese lithium batteries and parts, faced soaring costs and delays. The company's stock plunged. Jeff Bezos saw $23.5 billion vanish as Amazon's logistics empire, built on international networks, struggled with border friction, fuel hikes, and consumer panic. Mark Zuckerberg's Meta dropped $27 billion in market cap. Its major bets on VR, AI, and server farms located abroad suddenly became liabilities under the new trade regime. Altogether, these three lost $175 billion in personal wealth, not because of mismanagement, but because globalization stopped working. While tech collapsed, one sector quietly skyrocketed: rare earth metals. Trump's tariff policy included a strategic pivot: rebuild America's domestic supply of critical minerals. These elements power smartphones, EVs, semiconductors, and military weapon systems. Investors didn't wait. MP materials rose over 10% as news broke, but the biggest breakout? USA Rare Earth Inc., which surged over 70% in 5 days on retail and institutional momentum. New government subsidies, tax breaks, and military contracts were being discussed. Rare earths weren't just essential now, they were lucrative. It was one of the few sectors that didn't just survive the crash, it emerged stronger than ever. And then came the twist, the man behind the policy. President Donald Trump lost $1.2 billion of his own wealth. His real estate empire was hit from every angle. Material costs soared, construction projects stalled, hotel bookings slowed as global travel sentiment dipped. International investors froze up. Estimates show Trump's net worth dropped nearly 20% in a week, wiping out years of asset appreciation in days. He framed the tariffs as a masterstroke, a move to restore American strength. But the result? He took one of the biggest financial hits of anyone involved. In trying to reshape the economy, he reshaped his own fortune. This wasn't just a market crash. It was a reshuffling of the financial food chain. Buffett made billions by staying still. Goldman made billions by moving faster than fear. Sarah made her mark by embracing volatility while the old guard hesitated. And Trump, he reminded the world that power doesn't guarantee profit. Because this crash wasn't just about who was smart. It was about who was positioned, who had discipline, who had systems. The winners weren't always the one with the most money. They were the ones who saw what others missed and acted before the rest caught on. That's what separates luck from legacy. In every collapse, someone panics, someone profits, and someone gets caught in the fire they lit themselves. The market doesn't care about reputation, ego, or intentions. It rewards preparation and punishes the unprotected. If you made it this far, you're not here for the headlines. You're here for the story behind the story, the moves that most people miss until it's too late. And that's exactly what we're here to break down. So if you're the kind of person who wants to understand what's really moving the markets, subscribe. Because we don't just follow the news, we follow the money. Got a wild theory about what's coming next? Drop it in the comments. We read every one and we might just turn yours into the next breakdown. Because at Bedlam Bear, we don't do hype. We do history, strategy, and high-stakes storytelling. The market never sleeps, and neither do the stories hiding inside them. We'll see you in the next one.